Kitco News special coverage of the Precious Metal Summit is brought to you by Newcore Gold.
The gold mining sector has been hit by a confluence of factors, including weak equity prices overall, but can a turnaround be just around the corner? We're here to talk about gold and the mining sector with Luke Alexander, President and CEO of Newcore Gold. Welcome back to Kitco. Pleasure to speak with you. My first time speaking with you, Luke. Welcome to the show.
Yeah, thanks a lot for having me.
I want to talk about the macro picture first, and then we'll talk about your project in Ghana. So, Fed, obviously, a lot of people are concerned about what the Fed is going to do next, especially with the CPI print coming out today. We're speaking on the 13th of September. Headline CPI came in at 8.3%, slightly lower than last month, but still higher than consensus. Core CPI actually increased. And so inflation has not gone away, is the broader theme. Interestingly, though, the gold price itself dropped about 1% today. Equity indices also dropped tremendously. Why do you think gold dropped on higher CPI print today?
I think ultimately when you had that higher print above expectations, you've got the market starting to price in a 75 to 100 basis point raise by the Fed. I think we've seen the US dollar trading at 20, 30-year highs. And as we see expectations of higher rates, you'd expect the US dollar to continue to perform, and the performance of the US dollar has ultimately been an overhang on the gold stock or gold price over the last number of months. And I think that will continue until we start to see, CPI coming down and the expectation of the US dollar to start weakening to strengthen the gold price.
Well, the Fed Watch tool has priced in a high probability of a 75 basis point hike for a while now, Luke. Did today's prices in the markets indicate potentially that a surprise to the upside in terms of how many more hikes or the magnitude of the next hike could be around the corner?
Yeah, I think most are now almost certainly pricing in 75 basis points. And now I've reading this morning that some are starting to price in a 20% chance of a full 100 basis point hike. So in that kind of an environment, inevitably the US dollar is going to continue to perform, and that'll be an overhang on the gold price. But as soon as we start to see those expectations start to change, I think that's when we'll start to see gold perform. That being said, in this environment where we have had such a strong move in the gold price, the fact that gold has held in to a certain extent over that period, I think is a very good sign that when we do start to re-rate, it could be a very aggressive move to the upside.
Would you make the statement that gold is undervalued right now, if you could use such a word for a commodity?
Yeah, I think it's undervalued in terms of the momentum that I at least see in the next 6 months in terms of inflation starting to ease, as well as some of the tensions that we're continuing to see across the world. So as soon as those expectations change, that's typically when you start to see gold performing.
Another thing that gold responds to very closely is the real interest rate, which is the nominal rate minus the inflation rate. It has a very close inverse correlation. Now, ever since the beginning of basically May this year, the real interest rate has ticked up into positive territory, which some would argue has been the primary headwind for gold over the last 4 to 5 months. Let's get your take on where the real interest rate is headed. Do you think nominal rates will grow faster than inflation, or the other way around?
I think we'll start to see inflation coming off over the next few months. I mean, I think this month surprised people, but we'll start to see that come off over the next number of months. The other thing to look at is money supply. I mean, that's another big driver for the overall price of gold, and there's probably a higher correlation with money supply. And we've started to see governments around the world really start to pull back in terms of the amount of money they're pumping into the system, as we've seen these high inflation prints over the last number of months. So that's another factor that we want to keep an eye on.
All right. And a lot of people are probably wondering, investors in the space are wondering why it is that the gold miners have underperformed gold this year. I mean, gold was down slightly on the year, but the GDXJ, for example, the junior miner index from VanEck, was down about 25% year to date. Can you explain this difference?
I think one of the key things that's been led to the underperformance of the producers is disappointing earnings and capex inflation. I mean, we saw Newmont, again, the largest company on the planet, come out and they disappointed the market. They talked about capex increases. We've seen a number of mid-cap companies out there who've revised their capex expectations to the upside. So I think that's led to concerns amongst investors in terms of what's the big impact of inflation on all of these companies. And as a result, they've sold the equities to sit on the sidelines until they ultimately get a better grasp of what impact that inflation is going to have on these individual companies. So that's impacted the sector as a whole. If you look at Newmont, for example, from its 52-week highs, it's off over 50%. As a result, we've seen that sell off across the entire sector.
Mm-hmm. I'm going to talk about your company in a little more detail, but just generally speaking, how has Newcore dealt with inflation?
We're fortunate in the sense that inflation hasn't hit us that hard. I mean, we obviously don't have big capex items like a lot of the producers and advanced stage developers who are actually in the process of building projects. From an exploration perspective, drilling hasn't gone up meaningfully. The other natural offset we have is that the cedi, which is the currency in Ghana, has actually depreciated against the US dollar. So a number of our expenses are denominated in the cedi, which again is the Ghanaian currency. So we've had a natural inflation offset as a result of the weakening of our local currency. So we've been hedged a little bit from that perspective, but not blind to the fact that yes, inflation's here to stay, and that's something that we've got to make sure we address as we move the project forward.
Yes, I should mention to the viewers, you are based in Ghana, but we'll talk about that jurisdiction in just a minute. But going back to your operations, wages, energy costs, that hasn't, none of those have hit you at all?
Without a doubt, energy costs have hit everybody. Yeah. But again, wages, for example, because a lot of those costs are in cedis, you've got a natural hedge on those costs. There's also a huge pool of talent in Ghana, and the mining industry and mining jobs in Ghana are some of the most sought after jobs in the country. So as a result, we've got a huge amount of competition for those jobs, which again then helps in terms of the overall potential for cost inflation.
It's funny you mentioned Newmont. Goldman Sachs just initiated coverage of Newmont, and in fact, I believe this is their first time covering gold miners, if I'm not mistaken, and they are projecting a 20% upside for the world's largest gold producer. I'm just going to quote an article from CNBC here. The analyst who wrote the report from Goldman Sachs said that recent underperformance marks an attractive entry point for a low-risk gold producer delivering volume growth. So the sentiment for large producers is positive, at least from Goldman Sachs, a top investment bank. When do you think that sentiment will trickle down to the junior side?
I think typically the money flows into the seniors first, and then you see a bit of a waterfall effect down into the junior sector. One of the things that we hear from a lot of our institutional investors, we're currently 40% institutionally owned. These are deep-pocketed, long-term focused precious metals and mining investors. They're taking a bit of a barbell approach where they want to be invested in the producers, where they can receive dividends. They see the immediate torque there is from the increase in gold price in terms of the bottom line, but they also want to be invested in the exploration and advanced stage exploration side of the business, where they can see multiples of their multiple returns on their investments as a result of exploration success. In the middle, you've got a number of the advanced stage developers or companies that are going into construction. And given the inflation and capex blowout, we've seen a number of them shying away from that part of the market. So yes, into the seniors, but I think we're going to see a big move into the junior sector as well to get that big upside potential that comes with exploration.
What needs to come first for capital to move into your sector? Do we need a higher gold price, or do we need, I guess, just better financials from the companies?
I think without a doubt, higher gold price always helps. I mean, anytime you see the gold price going up, you typically see all boats rising, regardless of whether it's a producer, explorer, or in that mid-cap space. But I think we need a couple of quarters of companies, meeting and beating expectations to ultimately be able to get confidence from the broader market and from that generalist investor. I think until we see that, I think a number of those generalist investors who typically become the incremental buyer of the precious metal space will be sitting on the sidelines.
Just generally speaking, suppose you were to go on a roadshow, suppose you were to raise capital and issue equity, an investor might ask you, hey, Luke, awesome company you've got, we'll talk about that, but I'm just not sure about the gold space right now. Like I've mentioned before, the price has been stagnant all year round, even despite inflation numbers ticking up. The gold sector has underperformed the rest of the market, and so I'm just not sure. What would your counter be to that skepticism that perhaps the sector doesn't have a lot of potential?
So for our project specifically, I'd say at these gold prices, we have a very economic project and we're fundamentally underpinned in terms of a market valuation at today's gold prices. In terms of the outlook for gold, I would talk about, CPI most likely and inflation starting to taper over the coming months with, the significant increase in rates that we've seen globally. And as soon as, or historically, when you've seen that tapering of rates and the expectation for inflation to start to drop is when you see the price of gold start to perform.
Mm-hmm. Okay. Let's talk about Newcore now and your Enchi project. Am I saying that right? Enchi project. Yep. Your website lists or says that Ghana is the #1 gold producer in Africa. Explain why.
So it overtook South Africa a couple years ago as the largest gold producer. So now globally, Ghana is the 6th largest gold producer, just behind Canada. Historically, there's been 200 million ounces of gold discovered in Ghana. You've got 3 of the top 10 largest gold producers on the planet with significant operations in country. So with that, you've got a very supportive government. It's important for taxes. It's important for jobs. And as a result, getting projects built and moving projects forward, it's a very favorable country to be operating in. And at Newcore, we're very fortunate to have amassed such a large project. When we did, it'd be very difficult for a company to do that today.
Okay. Now, Ghana, why that jurisdiction in particular?
Again, for a number of the reasons I just spoke about. I mean, geologically, it's a great place. There's 2 prolific gold belts that run through the country, the Ashanti Belt as well as the Sefwi-Bibiani Belt. Our project situated on the Sefwi-Bibiani Belt, lots of very large deposits along trend from us. You've got Chirano to the north at 5.5 million ounces, Bibiani 6.5, and then one of Newmont's 2 producing mines, the Ahafo mine, which they're investing another $800 million into and sits at about 20 million ounces of endowment. So very large deposits. So for us, we obviously recognize that exploration upside and are aggressively drilling on the project. So that's, big part of the reason for Ghana. But then security and very low political risk are the other 2 key factors, as well as getting things built, pushing projects forward. You can get projects built in a fraction of the time that it takes in a number of other countries around the world. So that obviously is a real advantage that we've got in Ghana.
And the infrastructure there, how would you rate the infrastructure system around your project?
Very good infrastructure. So that's one of the things that we get to leverage off of. We've got a paved road that runs through the middle of our project to the town of Enchi. It's got a power line that runs beside it. Enchi sits about 15 kilometers away, so it's far enough away. We don't anticipate any issues when it comes time to developing, but it also means we can leverage off of all the services there are in Enchi, hospitals, schools. We can house all of our employees there. So we're not having to build $100 million of roads and power lines and camps to push our project forward. And that's one of the great things about the Enchi project is it's got a huge amount of flexibility in terms of being able to put a small heap leach project into development for very low CapEx. We've outlined as well 100,000 ounces of production for $100 million. So a very good capital intense project that could be of interest to a mid-cap company who that is a meaningful addition from a production perspective with upside potential beyond that. Or, as we've been focused, grow it to 3 to 5 million ounces, and that ultimately gives maximum flexibility. At that stage, the project's attractive to any mid-cap or major on the project. But being able to have the flexibility of all three of those things, I think really uniquely positions Newcore in terms of being able to create shareholder value and push the company forward.
Well, there's something like 2,000 junior miners listed or non-listed. What makes your company unique?
I think management is a big thing. The management and board have a proven track record of success in the industry. Companies like Newmarket, which started as a $10 million company and sold for $1.4 billion. Calibre Mining would be another one that our founders were involved in, which has been a real success story. As well as shareholder alignment would be another big thing. Management and directors, we own 24% of Newcore. We've invested alongside investors all the way through, and every financing since I joined 2 years ago, I've participated in. Having that alignment, I think, is crucial, as well as the support from capital markets. We've currently got 5 investment banks who cover us from a research perspective, as well as 40% institutionally owned. So again, these are deep-pocketed, long-term focused investors who recognize the district scale upside of our project and are keen to support us to build that value for shareholders. So support from capital markets, tier 1 asset, and then management, I think would be three of the things that really differentiate Newcore from a number of other companies out there.
Some investors might ask if you have enough runway to last a couple of years if, let's say, your capital was cut off for whatever reason.
Yeah, so we recently raised $5 million July of this year. And the way we always plan our budgets is we want to give ourselves 12 months of runway with the ability to extend that beyond if needed. So we've laid out a budget that'll last us for 12 months and can stretch further if needed. And that's essentially what we announced our phase 2 drill program on the back of. So yeah, so we've got lots of cash to keep the company going for a while. And I think that's a great question, because in this type of environment, there's a lot of companies who are running out of money, who are ultimately going to go into hibernation mode and aren't going to be able to continue to advance the project. We're going to keep drilling. We've got met results that will be coming out shortly. We've got a resource update coming out in Q4. So we've got lots of activity continuing to happen that will ultimately advance the project, build the fundamental value, and as the market recovers and we start to see investors coming back to the sector, I would think that we're going to outperform quicker than others, given we've been active on the project and building fundamental value.
Okay, and so we've talked about your milestones. We've talked about capital structure. Let's talk about how the rising interest rate environment is affecting your bottom line. Is it increasing your debt costs at all?
So we don't have any debt as an exploration company. We'd never want to be drilling with debt. We've always been able to raise straight equity. We haven't even had to issue any warrants to attract investors. Again, I think the investors who've supported us to date and who've come in, they recognize the value that we've got at our Enchi project and haven't asked for all the bells and whistles that other companies need to offer to attract capital. So that's a real advantage from that perspective.
There's some new I want to call them avant-garde fundraising methods that have been popping up in the last couple of years. SPACs, ICOs, initial coin offerings, going the crypto route. Any of these interest you?
I mean, we're always evaluating the market, looking at different options that are out there. And, I think you're doing a disservice to your shareholders if you're not constantly, evaluating what options are out there. Again, we haven't been able to find an option that's better at this stage than straight equity. That's not to say at some point there won't be an option that's better. But again, we haven't had to offer those bells and whistles and go down some of these alternative financing routes that sometimes look good on paper, but when you actually get into the nuts and bolts, you realize that the cost of capital is prohibitively expensive. So again, straight equity, we've been very fortunate.
Final message to a generalist investor who may not be familiar with the gold sector. He's evaluating your company and he's saying, well, the risk profile may be similar to a tech company of a similar size, for example. Why should I put my money in a junior exploration gold company and not a tech startup?
So our entry project, it's fundamentally underpinned by economics. So we put out a PEA in 2021 that outlined an after-tax NPV of $300 million at an $1,850 gold price. We're trading at about $20 million, $25 million Canadian today. So we're trading, US today. So we're trading at about 0.1 times what the fundamental value of the project is at an $1,850 gold price. That's a very attractive level, and levels that I haven't seen in years. From a ounce in the ground perspective, we're trading at about $15 per ounce in the ground on our 1.4 million ounce resource. We've got a number of drill results that will go into an updated resource at the end of this year. So our expectation is that we will grow the total number of ounces. And then Ghana's a tier 1 jurisdiction. I mean, to have a project of our size, 216 square kilometers in size, on a prolific gold belt in a tier 1 jurisdiction would be very hard to replicate today. So those would be a number of the reasons why I would look at investing in Newcore today.
So a lot of it is valuation play.
Valuation, and valuations have gotten to a level that there's deep value in Newcore today. And again, back to Newmont, it's off over 50% from its 52-week highs. And you look at the fundamentals of our project, the resource that we've put out, and that underpins the value of Newcore.
All right, well, Luke, thank you for your interview, and thank you for sponsoring Kitco. I appreciate it.
Yeah, thank you very much.
Thank you for watching Kitco News. I'm David Lynn. Stay tuned for more.
Kitco News special coverage of the Precious Metal Summit is brought to you by Newcore Gold.